Today, we're diving deep into the world of gold. It's been a fascinating ride for the precious metal lately, so let's break down what's happening and what you need to keep an eye on.
For today, January 26, 2026, XAUUSD gold has made history by crossing the significant psychological milestone of $5,000 per ounce. The market is currently characterized by high volatility and a strong bullish bias, though traders should remain cautious of a technical correction after such a massive rally. Technical analysis: the technical outlook remains strong across most timeframes, though indicators are flashing overbought signals.
First up, let's talk about the big picture. Global economic uncertainty continues to be a major driver for gold prices. Whenever investors get nervous about things like inflation, interest rate hikes, or geopolitical tensions, they often turn to gold as a safe haven asset. Think of it as a financial security blanket. We've seen this play out time and time again, and the current climate is no exception. Central banks around the world have also been on a gold buying spree, adding massive amounts to their reserves. This isn't just a small trend. It's a significant vote of confidence in gold's long-term value, and it provides a strong floor for the price. Now let's zoom in on the technicals. Looking at the charts, gold has been testing some key resistance levels. After a strong upward move, we're seeing a bit of consolidation, which is totally normal. The big question is, can it break through and start the next leg up? Key indicators like the moving averages and the RSI are giving us mixed signals right now. Some suggest we might see a short-term pullback, which could be a healthy correction before another rally. This is where patience is key. Rushing into a trade without a clear signal can be a costly mistake. So, what's the outlook for the coming weeks and months? My take is cautiously optimistic. The fundamental drivers supporting gold are still very much in place. The demand from central banks isn't slowing down, and the persistent inflation concerns will likely keep investors interested. However, don't ignore the short-term volatility. The US dollar's strength is another factor to watch closely, as a stronger dollar typically puts pressure on gold prices. It's a classic tug-of-war. To wrap it up, the long-term story for gold looks solid, but expect some bumps along the way. Keep an eye on economic data releases, central bank announcements, and those key technical levels we talked about. As always, this isn't financial advice, so make sure to do your own research before making any decisions. What are your thoughts on where gold is headed? Drop a comment below. I'd love to hear from you. Thanks for watching, and don't forget to like and subscribe for more market analysis. See you in the next video.